Hi, I'm Steve. I'm going to share my thoughts on how you can achieve a better financial future. Please remember, I don't know anything about your situation, so think for yourself and use what fits. Welcome back to our fabulous discussion on stock market terminology. Stock splits are done purely for cosmetic purposes and don't change the value of a company. When a stock splits, the share count increases, the price per share drops, and the market cap remains just the same. A reverse stock split goes the opposite direction. Again, the result is purely cosmetic. No value is added or subtracted. You might hear the term style box when reading about portfolio construction. A style box is a specific investment focus, such as domestic small-cap stocks. When building a diversified portfolio, you need to know that a fund manager will stick to their declared focus area. In other words, that they'll stay true to their style box. Our final two terms come from the Greek language via the field of mathematics. Beta is the relative volatility of one stock versus the overall market. Volatility is measured by standard deviation over a specified period of time. If a stock is twice as volatile as the overall market, its beta will be 2. A stock less volatile than the overall market will have a beta of less than 1. Recall that investors don't like bumpy rides, but can often be paid extra to tolerate them. Beta is the measure of how bumpy the ride has been so far. In theory, high beta stocks will have lower PE ratios as investors pay less for the future earnings. However, as discussed before, there are many other factors that drive PE. Finally, alpha is the amount of appreciation a fund manager earns above a comparable passive index of companies. For example, if the S&P 500 goes up 10% over a full year, and a portfolio manager investing in similar stocks earns 12% after fees, she has earned an alpha of 2%. As you might guess, alpha over time is the measure of a portfolio manager's performance. As an investor, you want to see a manager's superior stock selection creating better results than you could get by sticking with a passive index. Like any subject, investing has its share of terminology. Learning a few of these terms can go a long way toward helping you make better investment decisions. Well, that's it for this session. Thanks for watching, and I'll see you next time.